Hello Wolfpack, today we're going to be looking into the macro trends of Bitcoin, how the cryptocurrency market moves. We're going to be looking at the most important thing you can possibly look at in this market right now, one of the most important things. I'm not going to say the most important thing. One of the most important things you can possibly look at in this market right now, and in my opinion, that is the Bitcoin chart, and that is the 4-year cycle theory and the 4-year cycle. Now, some people would say that the 4-year cycle is invalidated. I would disagree with that because the 4-year cycle is not based off percentages. It is based off of date ranges. And the date ranges that I have on this screen here right now have proven to be incredibly accurate in predicting tops, bottoms, and how long the bear market and bull markets go for over the course of 3 separate data points, which is the 2014 cycle, the 2017 cycle, and the 2021 cycle, the 2013 cycle, sorry. And that is what we're looking at today. And we'll be explaining this in a bit of a detailed point of view, detailed perspective, and trying to get you guys to understand really what's going on here with the 4-year cycle theory. So the 4-year cycle theory is essentially, I would say it's not a theory anymore because it's happened on 3 separate occasions and you need 3 separate data points to identify a trend. And so this is actually a trend now, but I'm just going to keep calling it a theory out of habit. But the 4-year cycle theory is essentially a theory or trend that kind of aims to predict the tops and bottoms of the Bitcoin cycles on a macro scale. Now, a cycle technically is started via a halving, and that happens, for example, every 4 years. So we had 2012, we had 2016, we had 2020, and you'll notice that a cycle happens towards the end of every single bear market. For example, the 2016 cycle happened here just before we started running up in Bitcoin. The 2020 cycle happened here just before we started running up in Bitcoin as well. So the cycle, in the sense of the halving, generally triggers bull markets, okay? And that's very important to remember. But the halving itself doesn't actually have a massive role in the 4-year cycle theory, other than the fact that it triggered the whole theory in the first place, right? In terms of actually predicting tops and bottoms, it doesn't really play much of a role. Now, before I get into the data that we have available and before I get into the predictions that we can kind of extrapolate from that, what I can say is that one very important thing to look at when you're looking at a macro chart or any longer term chart on Bitcoin of a weekly chart is the 200-week SMA, this green line that I've just put in here. Why is that? Well, that is because Bitcoin has never closed a singular weekly candle in its entire lifespan, starting it from 2015 below the 200-week. It has been the predictor, the most accurate predictor of a macro bottom on Bitcoin that we have ever seen. There is no more accurate predictor than the 200-week SMA. The 200-week SMA is historically the best possible place you can buy Bitcoin because when you buy on 200-week SMA, you are buying at the lowest prices. This has happened for months and months. We had around 10 months of consolidation on the 200-week in 2015. We did not drop below it. We had around about 6 months of consolidation in 2019, about 5 months actually of consolidation in 2019, and then we also wicked down to it on the COVID drop, and even in that time of intense panic, we managed to hold the 200-week. This is a very important support zone, and you should be watching this at all times. For those of you who say that Bitcoin cannot go to 20K, I will kind of suggest that you look at the 200-week, look at where that is. Bitcoin could very well go to the 200-week SMA. Currently, it's at 21K. And by the time we get there, it will be around 24K if we do go there. So yeah, 100% Bitcoin can go below 30K again. I mean, the 200-week shows us that. We've tested that 5 times in the past. There's no reason why we can't test that again from a logical perspective. Before I get into the trends themselves and the date ranges, I would like to say that a lot of people would counteract the 4-year cycle theory by saying, well, the market is dramatically different now than it was in 2017 or 2013. To that, I would simply respond, the market was dramatically different in 2017 than it was in 2013. That would be my response to that. And for anyone who says that's not the case, all you need to do is look at the price of Bitcoin. The price of Bitcoin at the peak in 2013 was 1,200. The price of Bitcoin at the peak in 2017 was 20,000. Bitcoin went from being something that drug dealers and computer nerds used on kind of a daily basis that was scrutinized by the media to being something that was almost a household name in 2017 with immense popularity, arguably even more mainstream popularity in 2017 in terms of the name Bitcoin than in 2021, in which we had a relatively quiet cycle. Why is that? Well, that's because instead of retail getting massively interested, we had massive interest from institutions and corporations. And you could say, well, that's the catalyst for it being different now and acting differently. But in reality, we're actually behaving in a very similar way than we were in the 2018 bear market. There is a direct fractal that you can take from 2018 that shows that the price action since the November top and actually since September has been basically identical. So I don't want to hear any arguments that, well, oh, it's so different now, because in reality, yeah, it's different, but the TA is the same. It very much is one of those things where we need to go along with the old saying, the trend is your friend until it ends. And at this point, the trend has not ended. When will we have confirmation that the trend has ended? We will have confirmation that the trend has ended when we create a new all-time high before we expect it, right? That is basically the trend. If we break 69K in the 4-year cycle, we break above 69K, that would be a confirmation that it's invalidated, because that would be a macro high that we would not expect according to the 4-year cycle theory. Now, let's look into the data. Firstly, let's start at the red. Okay, so from top in 2013 to the top in 2017, we had 1,477 days. So 1,400. And then from the top in 2017 to the top in 2021, we had 1,400 days coming up again. From the bottom, and we're looking at yellow now, in 2015 to the bottom in 2017, or should I say 2018, let me just change that real quick. We had 1,400 days, again, very similar to the tops. And then from the top, from the bottoms in 2018 to the bottom in 2022, the suspected bottom, we would have 1,400 days roughly, putting us at a suspected bottom of November to December this year in 2022. If we're looking at the blue now, what we can see is that from the bear market bottom in 2015 to the bull market top in 2017, we had exactly 1,064 days. And from 2019 to 2021, using the same metric, we had the same amount of days, 1,064 days. This is not a coincidence. Now, this is 1, 2, 3, 4, 5 separate data points that are connecting these cycles in the same way. Moving on, we can see in the pink, we see from top in 2013 to bottom to 2015, we saw around 400 days. And then from top to bottom, 2017 to 2019, we saw again just below 400 days. There is a very clear correlation here on the 4-year cycle theory that is not present in something like lengthening cycles, that is showing that these cycles are not necessarily getting longer. Now, the length of a bull market and the length of a bear market might be expanding, but the distance between macro tops and bottoms is not expanding in the slightest. So using all of these date range informations, we can all this information about the date ranges here, we can estimate that the suspected bottom for Bitcoin will come, according to all of this data, and I've done the mathematics about this, I've done the calculations, would come between November and December in 2022. Now we're going to be looking at the white writing, and this is essentially saying that a test of a 200-week, okay, and this is very important here. This is looking at the resistance boxes between the all-time highs, extending it all across the bear market, and waiting for a breakout above these resistance boxes. Now, what we have is 1,190 days until we broke above the all-time high from the last all-time high in 2013 through the bear market. So we broke above that all-time high in March 2017, took 1,190 days. In 2017, we had the same thing, but it took 1,099 days. And then in this cycle, we're actually suspecting it to take about half the time. Why is that? Well, the distance from a 200-week SMA macro bottom at that point to the cyclical top in 2013 was around 520% if I measured it correctly. Now, here as well in 2017, it'd be about 520% or 540% on both, I should say. I'll change that after the video. And then now that the cyclical bottom will be about 24K on Bitcoin, according to my calculations of where the 200-week will be, measuring that to the all-time high, it would be around half of that, it'd be around 220%. And so we can assume that it would take half the time to break above the green box, which is the macro all-time high resistance. And hence, we should be back at all-time highs on Bitcoin, right? After bottoming out at 24K in November to December, we should be back at all-time highs on Bitcoin in August, maybe September 2023, right? That is the information we can extract from the 4-year cycle theory, right? It's very complicated to look at on a surface level. Once you look into this chart and you start to understand what's going on, you can understand that this is something that's played out multiple times now. This isn't just a guess anymore. This is coming through. I know it's a weak trend at this point, but it's coming through and it's turning into an actual piece of data, an actual trend. Now, if you looked at this 4 years ago, it's just a coincidence. Right now, it's not a coincidence anymore. There's stuff that's consistently playing out over and over again. For example, what I can say is that, well, this is the most compelling, by the way. If you just look at bottom to top, right? From bottom to top, 2014 or 2013 to 2017, 1,064 days. From bottom to top, 2018 to 2021, 1,064 days again. Then you look top to top and bottom to bottom, the number 1,400 comes up on 3 separate occasions. This is no longer coincidence. This is actually forming into a trend, and the trend suggests that Bitcoin will bottom out on the 200-week SMA, wherever that may be, probably around 24K in November to December, and then it would move upwards. And this is a bit more speculative, but it would move upwards and it would break new all-time highs during a bear market in August or September 2023. That is the trend for Bitcoin right now. That is what the 4-year cycle suggests. And so when you take into account how this trend is playing out and how a macro trend is very much more important than something like the daily chart, you need to understand that being macro bullish on something like Bitcoin right now is quite a dangerous game to play, right? Because you're actually betting against 10 years of historical price action that has formed a very strong trend, being the 4-year cycle theory. Does that mean you can't trade? Not at all. You can still trade even if you're not macro bullish, right? You can still enter positions. You just need to enter low risk positions with tighter stop losses, right? I'm not macro bullish on Bitcoin right now. I will not be macro bullish on Bitcoin until the fears of recession goes away or until the 4-year cycle is invalidated, because that kind of negates every single fundamental rule of investing. Invest with the trend until it ends. The trend is still alive. The trend is not dead. And the trend suggests we'll go down. Thank you guys. Have a good one.